Good morning, everybody. It's December the 7th, 2015. Time to kick off another trading week. We're probably starting to wind down slowly into the end of the year. A lot of firms close their books at the end of November to get the bonuses sorted out. Futures wind down pretty quickly. Equities can trade into the end of the year from Christmas to the end of the year, but most of the other futures contracts pretty limited activity, and so we'll plan on that. I think the markets are going to be stirred up and kept stirred up until the Fed speaks on December the 16th, and right now every indication from the Fed says they are raising interest rates 25 basis points, but they'll have language that will have a very, very slow and a very, very conservative increase in interest rates, justified only by improving economic conditions. Thursday's action, heavy selling in the stock markets and treasuries, based on the idea that what Yellen said and everybody else said, that the Fed was going to raise interest rates. On Friday, non-farm payroll came in higher than forecast. Stock market rallies off of that. So really is very, very difficult to make any kind of sense out of the news fundamentally, and this is support, this is resistance. If it holds, it's going to go the other way. If it goes through it, it'll go to the next levels, and that's the way that we have to approach the trading. Today's news is very, very limited. Gallup consumer spending, $92 per day on average. Labor market conditions index is 1.6. Nobody will trade it. Japan's leading economic indicator was as expected. Germany's industrial production was lower than expected. The Syntex investors' confidence was lower, which reflects fundamentals. There's an article out that Iraq may seek direct military intervention from Russia to expel Turkish troops. So I tell you, this countdown to war spreading out of the Middle East, out of Syria, to other spots. I mean, it just happens every day, and you hope that it doesn't get any bigger or get any worse. But Russia and Turkey are playing kind of a double dare you cross this line right now, and Turkey's been a hell of a lot more aggressive than Russia has. So don't know how Russia's going to respond. Ultimately, they've said they're going to impose economic sanctions. But Russia needs the hard cash flow, so it's we do live in interesting times. Okay, just looking at this particular screen, no news to drive today's trading. We have resistance at 26. And then the last we have rotate up is right here. So 31 to 03, sell 1, 7 to 11, sell 2. And I think it takes a big move by the E-mini to bust us out much above 126. On the buy side, pretty good support down here at 20. We have the overnight session low at 25. We definitely are looking at a P in the overnight structure, volume-wise. TPO or time-wise, we're looking at a B. So I'm guessing we're going to have some buying in this 20 to 24 area. So we'll make buy 1, 20 to 24, and buy 2, 13 to 17. But it'll really get down, I think, to what's the E-mini's going to do today. Okay, the 30-year, which is where the knob spread is, and the knob spread went out on Friday at 27.29, and we're at 27.25 right now, so the knob spread has come in a little bit, which implies we might see some selling here. We have this little saddle formation right here. You can see the market needs volume from 28 to 28, basically a full point. Definitely needs volume from 22 down to the 04, 05 area, and it's starting to sell right now. So on the sell side, would like to get it done against the buck, against 154, but 27 to 31 will be sell 1. Then we have this high right here at 13. We've got this spill from 16. We've got this break right here at 11. So 7 to 11 would kind of split that difference. I think it's easier to see a sell in treasuries because they do follow the fundamentals quite a bit better. 13 to 17 on buy 1, and then 1 to 5 buy 2. And we're picking up this area down here. We're leaning against this, what we call the saddle formation, or where the market needs volume. Gold was off a little bit. You know, every other day gold and currencies are up or down. That's a dollar play. And again, the central banks are really happy to keep the market in a trading range. They don't mind the informed few pushing it from one side of that to the other. That's not bad for us. We can see it. I mean, everybody, you can sit back and howl about the manipulation. It's what are you going to do about it? And from our standpoint, well, okay, we see it, we recognize it, we'll just join it and don't have to worry too much more about that. Okay, we're at 81.40 right now. London stopped at 83.90, so 83.85 sell 1, 88.90 sell 2. I think the market has to get back and retest this breakout at 75, so we'll make 75, 77 buy 1. And 71.69 buy 2. Dollars up, euros off. And it seems to be almost an every other day deal. At least 2 days for the dollar, 1 day for the euro and the yen. And again, the European Central Bank and European Union wants the euro lower so they can export more. It's not too hard to figure out. So we have support right here. Basically, we're at it, 108 plus or minus. I think we can go lower, so 775, get halfway into this gap, kind of right into here. Usually when we see single prints, I'll go with contracts. When they test these single prints, they usually get about a halfway in. So buy 1, 75, buy 2 in the 50 area. So 50 to 75 is where I see support. Resistance is 108.25, sell 1 right there. Then the spill came from 50, so 50 will be sell 2. Now, Friday's rally was supposedly attributed to Draghi in New York, said that they would do anything and everything to support the market. And he said that it was implied in the Thursday announcement. Obviously it wasn't, based on how the markets took the information. But again, it just shows you that these guys are scared to death of stock market selling. It's the only bright spot they can point to. Stock market's up. Don't worry, you'll get a job. You'll get a job. They cook the numbers. They cook the books. Show that the labor market's improving. So you got a good stock market and the labor market's improving. If you don't have a job now, it's coming. Okay, we're headed to retest the lows. And I believe the lows, and it on a scale basis, right under 38. So you've got this H low right here at 39.10. You got a G period low at 38.50. Then you got 37.90 to 38 is where best support is. We're going to go below. We're going to make new lows on this move, in my opinion. So we're going to plan for it. So the first place that might bring in short covering would be stops below 39. I think we're going to get deeper than that. So we'll play for 38.50, 38.75 for buy 1. And then 37.75, 38 for buy 2. May not make it down to the buy 2 level today. On the sell side, London's high was 67. We're at 11, so we'll make 39.50, 75, sell 1. And then 40, 40 and a quarter, sell 2. Might have to get off a short in that 39 and a quarter area. In fact, let's make it 39 and a quarter, 39.50. And 39.75, 40. Bring it down a quarter on crude oil. 38.50, 75, and then 37.75, 38 even. Okay, the E-mini, I mean, you know, logically speaking and fundamentally, I mean, who in the hell knows? I mean, I don't, and I don't think anybody else can do it. What we did see on Thursday was the 50-lot trader was a heavy seller all day long. The market was off 40-plus points. They took those shorts overnight. Right before the day session on Friday, some of those shorts were covered. The unemployment news hit, and off to the races after you got your first initial reaction to the downside. So here we are at resistance, 95 to the buck. So first sell zone is 95 to 97, sell 1. I think we're in a trading range when you go back and look at the charts. Usually good news takes you to the top of the trading range. Everything looks bright and it comes back down. I don't even think the news is at play. So the Fed's pretty content. 2,000 minus, maybe 20 to 2,050 support, 2,100 plus for resistance, and that's the way we'll play it. On the buy side, I think we've got enough volume down here at 85, 87. It may take a 90 to get in, but our first buy will be in this 85, 87 area, picking up this volume. And again, the easiest trade to see, in my opinion, is failure to get through 95, 2,100. We had this breakout at 78. So our next area of support would be this 81.79 for buy 2. And it may, I don't know, it may take a 90 to get in. We'll just have to kind of play it by ear and see what happens. But I don't think anybody can rationally explain what is going on in the marketplace. Higher interest rates has taken the stock market down. Rumors of such since 2009. It did on Thursday. Then we got the non-farm payroll numbers that supported higher interest rates, and the market rallied. So somebody smarter than me is going to have to figure it out. Okay, it's going to take a bit to get everything up and posted. I will get with you as soon as possible in a few.